What's going on, ladies and gentlemen? It is your main man, Elon Winning Ways, and I am here today to give you a rundown on what we should expect to take place in the market this May. Today is May the 6th, 2019, and what we should expect to take place this May moving forward, okay? So let's go ahead and we're going to talk about what we expect to take place with the dollar. We're going to talk about what we expect to take place with Aussie USD. We're going to talk about what we expect to take place with oil prices. We're going to talk about what we expect to take place with USD CAD, gold, USD JPY, British pound USD. Then we're also going to take a look at some cryptocurrencies as well. We're going to take a look at what's going on with Ripple. We're going to take a look at what's going on with Litecoin as well. Okay, so hang tight, you guys. We're going to cover a lot of information. And hopefully you guys can keep up because we're going to go pretty quickly, but it's going to be very detailed at the exact same time. All right. So let's go ahead and let's take a look at what's going on with the dollar index, ladies and gentlemen. All right. So this is the dollar index right here. I have a few markups. As you can see, I already have a few markups drawn from before. But so you guys can get a really good understanding of what's going on, I'm going to start from scratch with everything. All right. So I'm going to go ahead. I'm going to delete all these markups that you see. And we're going to start from scratch so you can actually understand what I'm looking for when I'm marking up this pair. Okay. All right, so now we're looking at pretty much a blank chart, a bear chart, or a blank chart of the dollar index. Okay. This is the monthly chart. As you see, we're currently looking at the monthly chart for the dollar index. Okay. Now, let's go ahead and let's take a look at what's been going on. Back in 2002, as you can see, this would be the all-time high for the dollar index, okay? Now, as you can see, price had a very nice bearish run all the way until 2008. And then in 2008, the market started to get some bullish momentum. But as you can see, it looks like the bear market is starting to come back into play, all right? So let's go ahead and let's draw some fibs on here so we can see exactly what's going on. So we're going to draw some fibs from the swing high to the swing low. Right here. Okay. All right. So we drew this fib on the monthly chart from the swing high to the swing low from 2001 until 2008. And as you guys know, the 61.8 is the golden ratio. That's the most important ratio on the Fibonacci retracement tool. And as you can see, the 61.8 ratio has held its own, held its ground. So that means that this is strong resistance right here, and the market should continue to drop. Now, I want you guys to take a look at what's happening since then. 61.8 level held. We got a retracement down to 38.2, and now it looks like price has made its way back to the 50. Now, we're going to go ahead, and this is what we're going to do now. We're going to erase this Fibonacci retracement on the monthly chart, and we're going to go down to the weekly chart, and we're going to draw a Fibonacci retracement on the weekly chart, okay? So we already got some idea of what's going to take place. Let's go ahead and see what's happening on smaller time frames. Now, 2016, October 2016 is when Trump won the election, and that is the second highest point of the all-time high for the dollar index. So we're going to draw a Fibonacci retracement from 2016 until just this past January 2008, okay? So you see, as I did that, look at that. We have another 61.8 retracement right here. And that is currently where the price of the dollar is currently at, okay? So now we should expect to see another strong bearish sell-off take place as a result of that. So if we scroll in, look at our look at our daily chart, we can get a better idea of what's going on, okay? It looks like the dollar index is making an M formation, a double top M formation. That's the first leg. This would be the second leg, okay? So my bias would be for the first take profit on this would be the 96.200 region. That would be the first take profit for the dollar index. The second take profit would be the 94 region. So what we're about to see take place on the dollar, ladies and gentlemen, is about to be historic. We're going to see a very big sell-off take place if this 61.8 ratio continues to hold. Now, if the 61.8 ratio breaks, then we could see price go all the way up to the 99-100 region. But I strongly doubt that that's going to happen. Just with everything that's been going on in the economy, everything that's been going on in the news and politics, everything is lining up for the dollar to make a nice bearish run, okay? As you can see, we even have a railroad pattern taking place right here. As you guys know, a railroad pattern. A bearish railroad pattern would be a green bullish candle followed by a red bearish candle. Usually that would mean that the market should make a nice bearish run from there, okay? So that's what I'm looking to take place. And as you can see, if we go ahead and take a look at the pairs that are US dollar related, they also line up with that ideology as well, okay? So my bias is for the USD to go short and for everything that is going against the USD to go long, all right? So let's go ahead and let's take a look at Aussie USD right quick with what we just went over right there, okay? What is the Aussie USD showing us that might give us some idea that we could expect for some bullish price action to take place with this pair? So let's go ahead and let's delete these trend lines that I had drawn. Let's delete some Bollinger Bands right quick. All right. Let's delete this right quick. Even though I'm probably going to redraw it, but I want you guys to see what we're going to be looking at from jump, okay? We're just going to look at a bear chart or a basic chart right here. We're going to get an idea on what's going to take place from here, okay? Let's delete that too. All right. So let's take a look at what's been going on the monthly chart for Aussie USD. All right. As you can see, if we go back to 2001, it seems that every single time price makes its way back down to the all-time low, it's holding, okay? These are demand levels. These demand levels are holding, all right? We got demand level right there holding, demand level right there holding, and this right here will be the all-time low, okay, for this chart. So with that being said, that means that it looks like we're in an uptrend, because in order for it to be an uptrend, that means that the price has to be making higher lows and higher highs. And as you take a look right here, each time the low is met, it is then turning into a higher high, okay? So we should expect for similar price action to take place right here. So what we're going to do is, because we're looking for some bullish price action, we're going to go ahead and we're going to draw a Fibonacci retracement to get an idea of where the market should go next, okay? So we're going to draw a Fibonacci retracement from the swing low, which would be, we can actually draw a swing low Fibonacci retracement back here in 2008, because that's probably the best one that we can get to get an idea of what may take place with the price action. All right. So as you can see, price is currently right around the 78.6 Fibonacci retracement. Okay. This should hold. All right. We also can take a look at what's going on with the relative strength index. All right. And if you guys are not familiar with the relative strength index, it pretty much is a measurement of oversold or overbought orders in the market. So as you can see, price is currently oversold significantly. All right. It's close to the 30 on the RSI. And the closer it is to the RSI, that means it's more oversold. The closer it is to the 70, the more it is overbought. Okay. So as you can see, each and every single time price is making its way back down on the RSI, it is making a higher low. Okay. So a higher low is being made right here, and a higher low is being made right here as well. Okay. So as a result of that, we should expect for the price to start to make its way back up the RSI. And as a result, the market should also make its way back up as well. All right. So let's go ahead and let's draw our Fibonacci retracement on a smaller time frame now to get an idea of what could take place from here. All right. We can start our first Fibonacci right here from 2005, and we can draw all the way up until 2016. All right. So we can get a much better idea of where it may be going in the short term. All right. So as you guys can see, our first take profit would probably be the 7.7099. That's what the 78.6 Fibonacci retracement is. And then the second Fibonacci retracement will be back to the 61.8. So if this uptrend is going to start taking place, these are the targets we're going to be looking at. So 70.7999, and then the second take profit will be 0.73218, roughly 220. Okay, and then we should look to see where price goes from there. But with the knowledge that we have about the dollar index, we should expect for price to continue to break its way through the 61.8, through the 78.6, make its way to the 50, 38.2, and so on. Okay. If you kind of look at what's going on right here, it even kind of looks like we have a double bottom on the monthly chart. Okay. We have one bottom right here, and we have a second bottom right here. That would basically mean price is making a double bottom W formation, and price should dramatically climb, ladies and gentlemen, over the next few weeks for the Aussie USD. So you could really place a buy. We have a buy on this right now. We got in at 0.69650, which is a very good entry. I don't think you can get a much better entry than we got on this, you guys, right down here. We caught it at the wick, right at the very low. We're up a nice 30-35 pips on it right now. You could probably hold this trade for the next few weeks to the next few months because it's going to dramatically climb, you guys. All right. So yeah, that's what my bias is on Aussie USD. Look for buys. Look for the double bottoms. Look for inverted head and shoulders. Look for morning stars. Look for these bullish formations because I'm expecting for it to not only close this gap right here, but it should continue to make its way up the grid. Okay. Now let's talk about oil. Let's go ahead and talk about oil right quick. This is an oil chart right here, ladies and gentlemen. Let's go ahead and let's start it from scratch so we can see exactly what's going on with oil. If you guys haven't been paying attention, I'm gonna let you know that commodities have been very bullish this year. Oil in specific has been very bullish. Okay, so take a look at what's been going on with oil. Let's go ahead and start on the monthly charts, and that's kind of what we've been doing the past few charts. All right. If you guys haven't noticed by now, I like to start off on the higher time frames, and then I like to make my way down. All right, from the higher time frames, usually from like the weekly to the monthly chart, and make my way down to the daily and the 4 hour and hour and so forth. Okay, and really, when you think about it, each time frame has a different meaning. Each time frame has a different different chart that I'm looking at. I'm looking for different things on different charts. Okay. So really, when I'm looking at like the weekly and the monthly chart, I'm trying to get a general idea on which direction the market is going to be moving for that particular week or that particular month, okay? Because then I can get an idea, am I going to be looking for mostly long positions, or am I going to be looking for mostly short positions? Am I going to be looking for mostly buys, or am I going to be looking for mostly sells, okay? And that's what you want to start off on the higher time frames for, so you can get a general idea on what type of market you're going to be trading with that particular commodity or currency pair. So let's go ahead and let's take a look at what's going on the monthly chart. As you can see right here, we have an inverted head and shoulders on oil. Okay, this would be the head, this would be the first shoulder, and this would be the second shoulder. Okay, so head, shoulder, shoulder, or you could even say this, but this is cleaner right here. Okay, boom, boom, boom. Inverted head and shoulders, followed by support being held. So support held right here, support held right here, and support is holding right here as well. So therefore, oil is in a bullish market right now. Okay. So what we're going to do next, because we're looking at oil being in a bullish market, we can start to go down onto the lower time frames and start to draw some Fibonacci's. Okay. So our first Fibonacci would be drawn from, right here. So we're going to draw it from this swing low to this particular swing high. Okay. And you can take a look at what's going on as a result of that. Okay. So price is currently hitting off of the 38.2 last week, and it made its way back down to the 50. All right. Now, if you guys are not familiar with the strength and what the Fibonacci levels mean as far as how strong it is, I'm gonna give you guys an idea right now. Okay. When you see a retracement down to the 38.2, when you see that 38.2 retracement level hold, that means that the price is currently in a very strong trend, okay? So if price retraces to the 38.2 retracement and keeps on going, that means that you're trading a strong trend. If price makes its way back down to the 50 and the 50 ratio holds, then that means that that trend is an average trend. And if you see price retrace down to 61.8, that means that the price is currently in a weak trend, okay? So if we draw this Fibonacci right here from the swing low to the swing high, you will see that earlier this year when oil made its very strong bullish uptrend, really from December the 30th of 2018 up until just this past week, there's been no retracement on oil prices, which also correlates with gas prices. So the higher oil goes, the higher gas prices go as well. Okay, so as you can see, oil has pretty much been in a strong bullish uptrend all year long. It finally made its first retracement these past few weeks, but look at what's going on. It looks like this 50.0 Fibonacci is going to hold. All right, so we can go down to the daily chart and see what's going on and take a look at that. On the daily chart, we have a morning star formation. All right, we have this bearish vector candle followed by this doji star followed by this bullish vector candle. So that right there is our bullish buying pattern. So we're going to be looking for buys now. We have a retracement to the 50.0 level, which held. Our moving averages are now working as support, and we have this morning star formation as well. So those are our confirmations to be looking for oil to start making its way back up the grid. All right, so I'm going to be looking for buys on oil as a result of that. Everything we just went over says that oil should continue to climb. Okay, so what we know with that information, we can take a look at USD CAD right now. Let me go ahead and clear this chart up so we can start from scratch so you guys can see exactly what I'm looking at. All right, start this over right quick. Okay, so with the information that I just gave you guys know that Canadian dollar prices and oil prices pretty much they correlate, they work together, they move in the same direction. The main reason is because most of the oil rigs are located in Canada. So when the price of oil is going up, that also means that the strength of the Canadian dollar is going up, since that's their major resource in their economy. Okay, so as you can see, if oil prices are going to go up, then that means the Canadian dollar is also going to go up. And as a result of that, that could mean that it could gain some strength over the US dollar in this particular pair. So if you take a look at what's going on the monthly chart with USD CAD, you look at the all-time high, which is back here in 2002. As you can see, price made a very strong drop until 2008. So that means that the Canadian dollar gained a lot of value over the US dollar over that period of time. As you can see, there's been some retracement. US dollar gained some strength, made its way back down in 2011. And then the US dollar made a very strong bull run from 2012 until about 2016, okay? And then now it looks like we're about to see another bearish run for the US CAD pair, okay? So that being said, it looks like we are in a downtrend with USD CAD. We're going to draw our Fibonacci from the swing high to the swing low, okay? When you're measuring uptrends, you measure from the swing low to the swing high. When you're measuring downtrends, you measure from the swing high to the swing low. So now we're going to look at the weekly chart to see where we're going to draw our Fibonacci from, okay? So where price is currently at, we can actually draw our Fibonacci from this particular evening star on November 2018. You see this bullish vector candle followed by this doji star followed by this bearish vector candle, right? So we're going to go ahead, we're going to draw our Fibonacci from the swing high right here to the swing low right here. All right. And now we can start to zoom in to see where price is currently at. And look at what we have here. We're right back at the 61.8 Fibonacci, ladies and gentlemen. We're right back on top of the golden ratio. So as long as this high continues to hold, we are going to be in a downtrend for USD CAD, okay? As you can see, price temporarily broke the 61.8 Fibonacci earlier this month, a couple weeks ago, about a week and a half ago, and it made its way to the 78.6. All right. Now, sometimes sometimes if the trend is a weak trend, the price can actually break the 61.8 and make its way to the 78.6. Usually the 78.6 would be like the last resort retracement. Sometimes they'll take it to 78.6 just to try to get you to think that the direction of the trend is actually reversing. But if you see the 78.6 level hold, more times than not, it is going to be as far as it goes. It'll make its way to the 61.8 and then continue the trend in that particular direction. Okay, so take a look at what's going on right here. We have a double top formation, M formation taking place right here on the daily chart for USD CAD. All right, first leg, second leg right here, and we should get a drop to take place as a result of that. Okay, so what I'm going to be looking for is a combination of things. All right, so first we want to look for the confluences. We're going to be looking for the sell, right? What are some things that are also going to tell us outside of the double top and outside of the 61.8 Fibonacci retracement that this is going to sell off? We will take a look at the RSI will be another indicator, okay? And as you can see, the price is making lower highs and lower highs in particular, okay? Lower highs in particular, and very soon it should be making some lower lows, all right, once this sell-off starts to take place. Because this is really going to be, this is like the highest that the USD CAD has been all year, okay? And as a result of that, we should start to see it make a very nice drop. And we're going to start to see some lower lows take place on this RSI index, okay? So, but pay attention to the fact that on the RSI, price is making lower highs, okay? So this is the highest high back here, which was the evening star. And then as you can see, right here, we have another lower high on March the 7th, 2019. We have another lower high right here on March the 26th. And we have another lower high right about here. Actually, it's about the same from March, but if you go back to early March, it's lower than that, okay? The prices on the RSI is lower than that. So even though price has sort of been uptrending most of the year, pay attention to the divergence. Pay attention to how the RSI is actually starting to make its way into a downtrend, okay? So those are some of the confluences that we have. What you're going to then look for is what's going on the 4-hour chart. As you can see right here, we have another M formation taking place just this past week. Now, what you're going to look for when you're looking to sell is you're going to look for price to break the 61.8. All right. It seems that the gap has already closed yesterday. And once this 61.8 Fibonacci retracement level breaks, price should start to make its way back down the grid. All right. So look for the formation. We might get a doji star formation right here, and then we might get a temporary bull run either during the London or New York session. But price should not break the previous high, which is about 1.34, 800, 900 area. That price should not breach. And the market should price should make its way back down the market. All right. I fully believe this is an information that should play out. The first take profit is going to be the 50.0 retracement. The second take profit is going to be the 38.2 retracement. And we should also start to see these moving averages, which was used to be working as support, should now be working as resistance. Okay. So pay attention to that. As you can see, if you go down to smaller time frames, and we're not looking at the hour chart, you can see that price was once, or moving averages were once working as support and now working as resistance. All right, more resistance. Moving averages are on top of the market. That's more resistance, ladies and gentlemen. All right. So we're going to be looking for sales on USD CAD as oil prices continue to climb. Now let's go ahead and let's take a look at what's going on with gold. All right, I'm going to go ahead and take my markings off of gold, and we're going to look at a clean chart of gold, so we can see what's going on with gold prices. Now, as you guys know, when gold prices are going up, that usually means that dollar prices are going down. Okay, there's a direct correlation right there. So let's take a look at what's been going on with gold prices. All right, as I said earlier this year, commodities should be very, very strong. And as a result of that, gas prices should go up and US dollar prices should go down. All right. So let's look at our monthly chart on gold right quick. Okay. Now, if you take a look at what's been going on with gold for, really since 2012, we've had a pretty much a solid period of consolidation. All right. Price has not been able to break out of this channel. Price has pretty much been in a channel since 2012. We've had some bullish fluctuation, we've had some bearish fluctuation, but price has not broken out of this channel yet. But I'm anticipating for price to break out of this channel over the next few months. As you can see right here, we had an evening star from was that January 2019 of this year. We had an evening star formation take place, which means a lot of traders probably thought that gold was going to drop. But look at what happened. All right, the market actually started to make a doji star candle just this past month, and it's following up May, which it looks like it should be a bullish candle. And if that is the case, then we're going to go from from an evening star to now a newly cemented morning star, which is what I anticipate to happen. All right, if that is the case, we're going to be looking for bullish price action, meaning we're going to be drawing our Fibonacci from the swing low to the swing high. Okay, so let's go ahead and let's do that right quick. If we want to get a good idea on where price is currently at in regards to this channel, the first thing we can actually do is, without even drawing our Fibonacci, we can just take a look at what's going on with the RSI and take a look at what's going on with the moving averages. Okay, as you can see, the moving averages are now actually working as support. Whereas before, 2017 and 2016, the moving averages were working as resistance. Okay, as you can see, the moving averages were above the price of the market. And now you see the moving averages are crossing and starting to work as support. Also, take a look at what's going on with the RSI. Okay, the RSI seems to be making higher highs and lower highs, which are also more confirmations for an uptrend. Okay, so as you can see right here, this range on the RSI is higher than this range. This range on the RSI is higher than this range. Okay, this range on the RSI from 2018 is actually at the same level it was at in 2016, but as you can see, it's not making it lower. It's not going lower than that. It's actually holding its ground. Okay, and also we have support holding on the candlesticks in the market as well. So those are two confirmations that we should be looking for more bullish price action to take place on this particular chart. Okay, so what we're going to do, because we're looking for some bullish price action to take place, we're going to find our swing low and our swing high, and we're going to mark it up right quick. So because it's in a channel, we can't really use these most recent swing lows and swing highs, because the price really hasn't made a real strong swing low or swing high. It's been in the same range for the most part. So what I'm going to do is I'm going to go back to 2015 swing low and 2016 swing high, and that's where we're going to draw our Fibonacci from. Okay, so this is where we're going to draw our Fibonacci from. All right, so take a look at that, you guys. With that Fibonacci being drawn right there, as you can see, the price made its way back to the 61.8 retracement, which was the end of 2018. All right, now I remember this. When this took place, I remember I had this Fibonacci drawn, and I said, okay, the 61.8 level held and made a Morningstar formation. We should get a very nice bullish run to end the year. And that's what we did get for gold. Gold made a very nice bullish run to end the year. Okay, now as you can see, prices started to retrace, and the market actually made a evening star, but as you can see, it looks like it is about to make a morning star to reverse the previous evening star formation that was made, which would line up with our confluences. All right, the moving averages are starting to work as support. The RSI is making higher highs and lower highs. So those are two other confluences that we have that we're going to be looking for buys here. Okay, so we can even go down to our smaller time frames and see what we can look at, see what's taking place. We could even draw another Fibonacci from when the bull run started in August, or yeah, in August of last year. We can draw another Fibonacci to see where price is currently at and where it should go as a result of that. Once again, we're drawing from the swing low to swing high because we're looking for buys. Okay, take a look at that. So on the smaller Fibonacci, price has made its way to the 38.2 level, and it seems that the 38.2 level is holding. We also have confirmation from the moving averages, which is still working as support. And it seems as if though the RSI, even though it has slowly over the past few weeks started to move in a bearish direction, a downward direction, it is slowly starting to make its way back into a bullish direction. As you can see right here, earlier this last month in May, price is starting to reverse and make its way back up. Okay, so remember what we talked about when we were talking about the strength of the Fibonacci levels. 38.2 is a strong retracement, or excuse me, a weak retracement. Or well, it depends on how you're wording it. The 38.2 means it's a strong trend and a weak retracement. The 50.0 means that it is an average trend and an average retracement. And the 61.8 means that it is a weak trend, okay, and a strong retracement, okay. So the 38.2 level, if it does hold, gold is going to boom. We're going to get a very, very strong bullish uptrend that's going to take place this week and throughout the rest of this month, based off of the information that we just went over right here. Okay, so that means that USD CAD should go down significantly because, as we spoke about, if gold is gaining a lot of momentum, the US dollar is losing momentum. If oil charts are continuing to climb, then CAD is going to continue to climb. And if that's the case, then USD CAD is going to drop significantly. All right. So our targets are going to be, looking at this oil chart right here, our first target is going to be 1300. All right. From this 38.2 Fibonacci to this 23.6 Fibonacci. Our first target is going to be 1300. Okay. Our second target would probably be the previous high, which if that breaks, then it could really go easily into the 1400 region. The previous high is from February 2019, all right? That's the previous high for gold, the most recent previous high, which if that breaks, like I said, you guys, it's gonna break out of this channel. And once it breaks out of this channel, it can climb significantly. All right, so that's what I'm going to be paying attention to. Everything is shaping up for the market to make a supernova breakout over the next few weeks and next few months. So let's go ahead and let's take a look at what's going on with USD/JPY. All right, USD/JPY. What are you giving us? What are we looking at right here? Let's go ahead and let's start off with a clean chart, so you guys can see what I've been looking at when I mark it up. Okay, delete these Fibonacci's. I need some clean Fibonacci's. Okay, so now we got a clean chart. All right. So let's take a look at what's going on. We have another channel, all right, on the monthly chart for USD/JPY. But I want you guys to pay attention to what's going on in this channel, all right? Now, it appears that, okay, 2016, okay. So if you guys take a look at what's been going on in this channel, we go all the way back into, what is that? It's 1998 actually. That would be the all-time high for USD/JPY. And as you can see, price has started to make lower highs. So we got a lower high right here, 2001. A lower high right here in 2007. The lows actually sort of held its way all the way up until 2008 is when the low started to make new lows, and then the all-time low would be in 2012. Okay, so as you can see, the all-time low was made in 2012. The US dollar started to rebound. All the way up until 2015 is when the next most recent high was made for USD JPY. But as you can see, it didn't really break the previous high from 2007. So that high from 2007 was pretty much held intact. The high from 2015 is where the most recent high was. Okay. So let's go ahead and let's take a look at what happened as a result of that. Okay. So based off of this chart right here, you guys, it looks like we're in a downtrend. Reason being because, like I said earlier, the lows are getting higher, and as you can see right here, this is the lowest point right here, which is significantly lower than the 2005 low, and the 2000 low, and the 1997 low. Okay, so because of that, I'm going to be looking for. I'm going to draw my Fibonacci from the swing high to the swing low because that's what we do when we're looking for downtrends. Okay, so let's go ahead and let's do that right quick. It's not even important. It's not even gonna get in the way, honestly, from this market we're about to do. Okay, so we're gonna use the 2015 high. We're gonna draw the 2015 high to the most recent low, which was in the 2015. Okay, so we have the high from right here. We draw it to this most recent low right here. Okay, now let's take a look at what's been going on ever since then. All right, so as you can see, ever since this channel had pretty much started, price in 2016, this is when Trump won. Okay, so I want you guys to pay attention to what happened. All the dollar pairs made a nice bullish run when Trump won, because that's when there was a lot of confidence in the economy, the U.S. economy. Look at the slogan, "Make America Great Again." The U.S. dollar was booming for a few months. But as you can see, what happened when price made its way to the 61.8 Fibonacci, what took place with USD JPY, you guys? That 61.8 level held, right? Now, the channel started. We got a retracement down to the 38.2. The 38.2 level held, took the price back to the 50.0. Then we had a break of the 38.2, took price back down to the 23.6. That level held, made a Morningstar formation. And then we had a nice bullish run in 2018. I remember that. Earlier 2018, the US dollar made a nice bullish run. Okay, it took us back to the 50.0 Fibonacci, which also held. All right, so I want you guys to pay attention to this. All right, the 61.8 level held when Trump won, and then it retraced to the 38.2. Price made its way back to the 50.0. All right, so these are all the signs of a downtrend, because as you can see, the market, the Fibonacci levels are getting lower. Okay, so 61.8 level has not been met ever since the Trump election, and we've started to see price move in a channel, but it's been in a bearish channel, to be honest with you. Okay, so as you can see right here, a few months ago, that was our last retracement down to the 23.6, and that was, honestly, I believe that was the flash crash that took place. That was the flash crash that took place in January. Yes, it was. All right, that was the flash. We cleaned up on that. We caught a lot of pips on that trade. I made well over a couple $1,000s on that particular trade. So yeah, I think we could start to see something like this take place again, you guys. So even though a Morningstar formation was made, it looks like price has started to hold on this 50.0 Fibonacci, and we should start to see the price make its way back down to the 38.2 and the 23.6 level. Okay, we also take a look at what's going on with the RSI. All right, the RSI has even been moving in a bearish direction as well. Okay, as you can see, the RSI is moving in a bearish direction, lower highs, and for the most part, it has been making lower lows. Now, it did for a short period of time. If we take a look at what's going on right here in 2016, this is when Trump won the election. And as you can see, the RSI has sort of been moving in a bullish direction. Okay, so we actually do have some bullish patterns, or some bullish movement taking place on the RSI, but it hasn't really shown up in the price on the US dollar, USD JPY pair. It hasn't really shown up in that, okay? So what I'm going to be looking for is for this 50.0 level to continue to hold. And I'm going to be looking for these higher highs, to continue to hold and make. Soon, my bias is for the price to start to make some lower lows and some lower highs as well, okay? So let's start to look at some lower, we're just on the monthly chart right now. Let's look at the lower time frame and see if we can kind of get a better idea for what is going on, okay? So pay attention to this right here, you guys. Pay attention to the M formation. We got an M formation right here on this weekly chart. This would be the first leg of the M. This would be the middle. This would be the second leg of the M. And if that is the case, once this gap closes right here, we should get a very nice drop that should take place, okay? Another thing to give us more confidence in this M formation playing out is this evening star formation right here, all right? We have this bullish hammer. This is a hammer, actually, not a vector candle. This is a hammer. This is a bullish hammer followed by a doji star followed by a bearish vector candle, okay? So that's an evening star formation, you guys, and we should get a very nice drop as a result of that once this gap right here closes, okay? So also pay attention to the moving averages. The moving averages are they're not working as support, they're actually working as resistance, all right? Resistance holds the market down, support holds the market up. So the moving averages are working as resistance right now. And it also looks like the RSI is starting to hold the highs, and as a result of that, it should start to make lower lows in the very near future. So USD JPY should start to move in a bearish direction once this gap closes. All we have to do now is start to look for formations that coincide with that. So yesterday, price made a doji star. What my belief is going to happen is probably either during the Tokyo session or during the London or New York session, we're going to get a nice close on this gap, and then we're going to look for a bearish formation that should take place. Do you see these resistance moving averages that are holding the price down in the market? Every time price makes its way to this moving average, the price is starting to move back down in a bearish direction, okay? So that means that price is actually in a very strong downtrend. So take a look at this right here. Take a look at this this red moving average right here. This is a very, very strong moving average. As you can see, price broke that. That was supposed to be like strong support, but as you can see, it broke. So what's going to happen is this, you guys. We're going to get a retracement back up to probably this red moving average, which is where the gap is from where the market opened on Sunday. And once that gap is closed, I'm anticipating for them to either make head and shoulders or an evening star formation, and we're going to be looking for sell formations on this particular pair, okay? So we're bearish, you guys, on US dollar pairs across the board. I hope you guys can see exactly why. We're going to do one more markup, and then we're going to talk about some cryptocurrencies, okay? So here is British pound, US dollar, all right? Let me go ahead and let's get rid of all these indicators that I have right now. Let's see. Let's go ahead and let's erase this one. Okay. So, let's see if this one's still in the way. Kind of, sort of, but not really. I wouldn't even worry about this one. Well, we were able to get rid of it. Cool. Good deal. All right. So, once again, you guys, let's just start off on the monthly chart. All right. You see what's going on? Look at this. Look at what we have here, ladies and gentlemen, on the monthly chart for British pound US dollar. All right. Now, actually, British pound US dollar has been moving in a bearish trend. All right. Pay attention to that. British pound US dollar has been bearish, you guys. Okay. But take a look at what we have here. We actually have a double bottom. All right. We have a W formation, double bottom. All right. Now I'll go ahead and draw it for you guys if you can't see it. All right. This would be the first leg of the W right here. Okay. And then this would be the second leg of the W right here. All right. So with that being said, we're also going to look at the oscillator, the RSI oscillator, to see if it can give us some confirmation. All right, pay attention to what's going on. This is the lowest point the RSI has been for British pound US dollar, which was back in 2009. All right. Now, even though price has made a lower point than that, the RSI has pretty much been moving in a bullish direction. Okay, so we have the RSI holding right here, and the RSI also holding again right here. Okay, so you can see why there's sort of some indecision right here. You know, with Brexit that took place with British pound US dollar, you know, there possibly is some idea that we could get some bearish price action here, but in my mind, that is not what's going to take place. So take a look at what's going on right here, you guys. Okay, even though price has made an all-time low with the British pound US dollar pair in 2016. Yep, that's the lowest point it's been. And I believe this was right around the time Brexit took place. So yeah, this is why the British pound US dollar pair is so low, because this is when Brexit took place. Okay, this is when Brexit took place in summer of 2016. I remember because I was in a different country at the time. I was in Bermuda, and they're actually a British colony, so it was a big deal over there. So as you can see, this is why the British pound made its low that it did. But I want you guys to take a look at what's going on. All right, we have, as a result of that low being made, we have a double bottom formation forming. Okay, we also have the RSI oscillator. Ever since that double bottom was made, that all-time low in Brexit, as you can see, it started to move in an uptrend. Okay, and then also pay attention. This is very important right here. The second leg of the W, the RSI, is significantly higher than the all-time low from Brexit. Okay, so that gives me an idea or a belief that we should get some bullish price action taking place on the British pound US dollar as a result of that. Okay, so you guys, we're going to be looking for buys on British pound US dollar as well. Okay, with that being said, we're going to draw our Fibonacci from the swing low to the swing high. Okay, go ahead and delete those right quick. From the swing low to the swing high. Now let's see if we can start to get an idea from where price should make its way to. Okay, now I want you guys to pay attention to this right here. We're on the monthly chart still. About 4 months ago, early January, price made its way to the 61.8 Fibonacci level, and as you can see, that level held. It wicked to the 61.8. So usually when you see a wick to a Fibonacci level, that means that price is moving strongly in the opposite direction. All right, so with that being said, price is strongly moving away from the 61.8 Fibonacci level, and it should be moving into a bullish direction. This is also the second leg of the W on the monthly chart. And we also have bullish price action taking place on the RSI oscillator, you guys. So those are our confirmations that we should be looking for buys on British pound USD. All right, we can take a look at our weekly chart as well. All right, take a look at what's going on the weekly chart, you guys. The 50.0 level is currently holding. All right, the 50.0 level is working as support. Price is not breaking the 50.0 level. Let's go down to the daily chart. Take a look at this, you guys. Just this past week, we had a morning star formation, the end of April. All right, and as you can see, price has made a booming, strong, bullish uptrend, well over 200 pips in the past couple of days, you guys. Now we're seeing a little bit of retracement take place. So if we want to get an idea on how far this retracement should go before price starts to move back into a bullish uptrend, we can draw our Fibonacci on the current uptrend that is starting to take place, which is, in my mind, the second leg of the W. All right, so let's see how far price should go before it starts to go back up. Okay, so take a look at what's going on. All right, and this current trend, price made its way back down to the 61.8. The 61.8 level held and made a very strong bullish uptrend. This was actually NFP Friday, just this past Friday, if I remember correctly, which it looks like it was. All right, very nice bullish uptrend. 61.8 level, retracement level held. Okay, so now, as you can see, just this past day, which was yesterday, or yeah, Monday in the market, you can see price made its way to the 23.6 level. All right, the 23.6 level is actually holding. Now, two things could happen from here. Sometimes the 23.6 level actually holds, and the 23.6 level holds. That means it's a very, very strong bullish uptrend, which is a possibility because this is the second leg of a W on this particular pair. The second thing that could happen is we could get a retracement back down to the 38.2 or possibly even the 50.0, but price should not make its way back down to the 61.8. So I'm actually going to hold off on British Pound US dollar before I look for any more buys on it, because I want to see what Fibonacci level is actually respected before price starts to make its way back up the market. All right. We're going to look for our confluences as well. It looks like we have a bullish uptrend taking place on the RSI oscillator. All right, so now we're going to just look on smaller time frames to see what it may be telling us. There's a possibility that this low right here could hold. In this 1.30 700 range, this level could hold. But there's also a possibility that it could make its way back down to 38.2, which would be ideal. That would be a safe trade in my mind, in order to wait for the 38.2 level to be met first before you look to get in this. But if they give us a strong bullish formation, inverted head and shoulders, a double bottom or something of that nature, we could possibly look to take a buy right here, because like I said, on higher time frames, this is a double bottom, guys. I mean, this is a W formation, and this should just a climb, okay? And it looks like the price is trying to make a morning star formation right here as well. You see, we have this bearish vector candle followed by this doji star candle from last month. And it looks like we're about to get a bullish morning star formation right here. And price should significantly climb. I'm telling you guys, what's about to take place from what I see right here is about to be some historic price action. Like historic. You're going to see major moves take place in the market over the next few months, based off of what I'm telling you, based on what we're going over right now, okay? So just pay attention to what's going on. Look for the formations to play out, and then take your positions. And of course, always look for your confluences as well. You always want to have at least 2 confluences before you take a trade, but in my mind, you want at least 3 before you can be really confident in a position. And then of course, you want to take your positions either at the high or the low of the day, okay? The high of the day or the low of the day. The high of the day or the low of the day is usually during the New York session, early in the New York session, late in the London session. That's usually where the high or the low of the day for that particular pair is. So if you're trading US dollar pairs, you're going to be looking for the high of the day. All right. If you're trading dominant like US dollar pairs, like USD CAD and USD JPY, where the USD is actually the first of the 2 in the equation or the pair, you're going to be looking for sells. So if you're looking for sells, you're going to be looking for the high of the day. If you're looking for buys, you're going to be looking for the low of the day. All right. And like I said, that's usually taking place between late in the London session and early in the New York session. All right. Stop loss always goes 10 pips above or below the high of the day plus the spread. All right, that's always where your stop loss goes, because if you're right on your bias, if your trend direction is right, it's not going to hit your stop loss 9.9 times out of 10. Every now and then, let's say some crazy news takes place, it could possibly hit your stop loss with that formula I just gave you. But more times than not, as long as there's no crazy news going on, that stop loss is going to be intact, it's going to hold, and price is going to be respectful and is going to make its way in the anticipated direction, okay? So that's what we have going on right now, you guys, in the Forex market, okay? British pound US dollar, long, gold, long, oil, long, Aussie USD, long, USD JPY, short, USD CAD, short as well. So that's what we're going to be paying attention to, you guys. It actually looks like British pound US dollar is trying to make its way up the market right now as we speak. Something to pay attention to, okay? So I'm going to be eyeing this over the next few days, next few weeks, next few months, you guys. stay true to this analysis that we have going on right here, and you should be good to go. All right. So I'm going to come back with another video after this. We're going to break down some cryptocurrencies. But as always, you guys, you already know, I look forward to seeing you at the top and not from the top. Let's go out here. Let's catch these pips. Let's smash these markets. Let's make it a prosperous 2019 and beyond. See you in the next video. Peace.